Anglo American has reported a 13% fall in interim copper production and a 26% plunge in rough diamond output. That's as demand remains sluggish. Despite the current challenging market conditions, the miner says a formal process for the sale of De Beers is advancing. The miner is restructuring its business to mainly focus on copper as well as iron ore. Kumba Iron Ore has reported a slight decrease in first half production, but sales rose as logistics improved. Total output for the 6 months ended June fell 1%. That's largely due to a planned drawdown of high levels of finished stock and maintenance activities at the group's Sishen mine. Sales rose 3% as Transnet's performance at Saldanha Bay Port improved. Given the developments during the period, Kumba has maintained its full-year guidance for both production and sales. The firm has also provided the market with a trading update. It expects headline earnings per share to be between R21.33 and R22.89. This would reflect a decrease of as much as 4% on the previous period, or an increase of around 3%. Surging platinum group metals prices have given a lifeline to Northern Platinum. The miner's value has more than doubled in the past 6 months, ending its 3-year decline. But the group CEO, Paul Dunn, has struck a cautious approach to the situation. In the firm's latest trading update, he warned that the PGM market remains uncertain, and so the miner continues to remain internally focused. Strong, that's how Primary Health Properties has described its half-year performance. The UK-based real estate investment trust has posted a 2.3% rise in adjusted earnings per share and believes more growth is on the horizon. That's as it eyes positive developments coming from England's government's 10-year health plan for the NHS. It also believes the group's tie-up with Assura will yield results. That transaction has been approved by 99% of PHP shareholders and is expected to be completed in the fourth quarter. The Competition Commission has given its nod of approval to ASP Isotopes' proposed acquisition of Renogen. The US-based and NASDAQ-listed firm plans to make Renogen a wholly owned subsidiary of its business. While the green light clears a key regulatory hurdle for the transaction, it does come with conditions. The Competition Commission says ASP Isotopes has accepted these, but details of the conditions have not yet been made public. And Treasury has been hit by a cyber attack. The government's finance department says it identified malware on its infrastructure reporting model website and had to isolate the IRM servers to assess the magnitude of the compromise and to ensure the security of its systems. Despite these events, Treasury says its systems and websites continue to operate normally without any disruption. In international news, European new car sales declined by over 5% in June, according to the European Automobile Manufacturers Association, reflecting the industry's global challenges. Here's more detail in this package report.
New car sales in Europe fell more than 5% in June. Data from the European Automobile Manufacturers Association revealed the global challenges faced by car makers. Tesla lost market share for a 6th consecutive month, despite a rise in overall sales of electric cars. While the 4 best-selling groups in Europe, Volkswagen, Stellantis, Renault and Hyundai, all sold fewer cars than in June last year. Stellantis had the biggest drop at 12%, while VW fell 6%. On Thursday, Hyundai also posted a decline in second quarter operating profit. European automakers have booked multi-billion-dollar losses and issued profit warnings of late. They're struggling to handle competition from China, US import tariffs of 25%, and domestic regulations aimed at speeding up the EV transition. Sales in the EU, Britain and the European Free Trade Association fell to 1.24 million cars in June from a year earlier. Tesla's sales were down nearly 23%. The share of brands not accounted for by the ACEA, including BYD and other Chinese car makers, more than doubled to 4.5%.
Meanwhile, Tesla chief executive Elon Musk says U.S. government cuts in support for electric vehicle makers could lead to a few rough quarters for the company before a wave of revenue from self-driving software and services begins late next year. Here's more detail.
Tesla's in for a few rough quarters, says its CEO Elon Musk, citing U.S. government cuts in support for electric vehicle makers. That's as Tesla posted its worst quarterly sales decline in over a decade. Overall revenue fell 12%, despite the launch of a refreshed version of Tesla's best-selling Model Y SUV, which investors had hoped would boost sales. Revenue and profit were also hurt by a 51% dive in the sales of regulatory credits. Those credits are bought from Tesla by other automakers who have difficulty complying with government emissions rules. The U.S. government later this year is cutting tax credits of up to $7,500 for EV buyers. When asked on a quarterly results conference call about the credits, Musk predicted a few rough quarters before a wave of revenue from self-driving software and services begins late next year. Tesla shares fell nearly 5% after his comments. In the meantime, Tesla says it is working on a new, cheaper car with a few initial units made by the end of June. But production would ramp up next quarter, slower than initially expected. The company also said it continued to expect volume production of its custom-built robotaxi, called the Cybercab, and semi-truck in 2026. Much of the company's trillion-dollar valuation hangs on its bet on humanoid robots and on its robotaxi service. But one analyst, CEO of Systematic Ventures Max Wolf, was skeptical of its chances to turn fortunes.
Other guys who have done more rides with less issues in robotaxi, particularly Waymo, this is sort of a major competitor here, who's been at this longer, done many more rides, and seems to have had a smoother integration. For the robotaxi business to rescue Tesla, as some had hoped, it would have to have gotten a lot further, a lot faster than it has.